Hey there, thank you for stopping by. Today I'm going to talk to you and share with you a bunch of information about the latest market data and update for Portland, Oregon. We are currently in December 2025, so all this data is coming from November. Soon I will be doing a market wrap for the year when we have that data in January. And I'll also be looking to do a 2026 market forecast video, so be on the lookout for those. But let's get to it now for the latest data from November. Give me a second. Let me get this dialed in. Okay, so inventory takes a sizable dip and then rises right back up to where it was. So this is always my favorite thing to look at. Inventory, as you can see, 3.8 months of inventory. So basically, it's up from last year at this time and just up a little bit from the year before. You can see in September we were at 3.8, and then it dropped in October and bounced back up in November. I'm not totally surprised that it bounced back up. It is kind of interesting to see these big swings here in the last few months. I'm not sure exactly what's driving this. Obviously, interest rates are a big driver, but they've been more or less in the same vicinity. I'll show you an interest rate graph here in a little bit. But anyways, this will be something to watch into next year. It's also kind of interesting that this entire year has been in the threes, from 3.0 to 3.8 months of inventory. Overall, I've always heard from like 4 to 6 months as a balanced market. I will say, living this market right now for the last couple of years has felt a little bit more like a balanced market. And I feel like if we got up to 6 months, it would really start to feel like a pretty firm buyer's market. So at least here and at least now, 6 months definitely sounds like a buyer's market to me. Right now, it feels pretty balanced. We still see multiple offers sometimes, and we still are seeing properties on the market for several months. So it really depends. So here's the interest rate graph for you. Interest rates still remain low. So 6.22% on the 30-year fixed is what we're seeing from this Freddie Mac graph. As you can see, the 52-week range is 6.17 to 7.04. So we're really at the low end of this range. And you can also see it last year at this time, rates were, 6.6, looks like about, and now we're at like 6.2. So we're almost 0.5% lower. So that's certainly good news for, I think, most everybody. Let's take a look over at a year-over-year comparison for all these numbers. We've got new listings, pending sales, closed sales, average sale price, median sale price, and total market time. You can see here, most of this, I think, trends more positive for buyers than sellers. We have less new listings, which I don't think is particularly good for buyers, but pending sales, this is the one thing that is kind of pro-seller, more buyers at least going under contract. But this number, this closed sales, down 9.6% in November of 2025 compared to 24 is pretty interesting. I wouldn't have guessed that. I do know that in October last year that the interest rates had really dropped and there was a big bump in activity. So that could be partially due to that. But again, like, our interest rates are down here, so I would have expected a little bit of that bump right now too. So hard to know. Average sale price down 2.6%. Median sale price, which I focus on more than the average, is even. It's 535 compared to 535 last year. So that's interesting. Prices continue to be pretty flat. And have been pretty flat over the last couple of years. Again, inventory up 0.8 months, and the total market time is up 8 days. So it's taking longer to sell. Which is not entirely a surprise at this point in the market. What I've been seeing this year. Sorry about that. Okay, so I want to look at this national news that came out from the National Association of Realtors. They put out their yearly buyer and seller profiles, and I think this is some pretty interesting information here. I think it all really kind of supports like what we've been seeing and the impacts of the affordability issues that we're having as a country, that we're seeing in the housing market, the higher interest rates, etc. So first-time home buyers sink to an all-time low. So just 21% of the market, the lowest level since NAR started tracking this in 1981. So again, this says that the historically low share of first-time buyers underscores the real-world consequences of a housing market starved for affordable inventory, which again is just what I was saying at the start of this, is affordable inventory, which is just not a ton of houses on the market, and just interest rates being higher. So it's just hard for first-time home buyers to be able to afford. They don't have the equity that a lot of buyers have to be able to get into the market. So it's really pushing a lot of them out right now. Record high of all cash buyers. I think that's also an impact of the interest rates. So 26% of last year, by comparison between 2003 and 2020, fewer than 1 in 10 buyers paid all cash. So again, you can see a lot more buyers coming in with cash rather than paying higher interest rates. higher down payments. Again, median down payment was 19%, 10% for first-time home buyers, and 23% for repeat buyers. That marks the highest median down payment for first-time buyers since 1989, and the highest for repeat buyers since 2003. So I do have a little graph for you, so you can just kind of see this, see where down payments how they've kind of gone down and then up. It's just my opinion, but I don't think that it's a surprise that this is happening. This is really when interest rates in 2022 started to pivot, and you can see a pretty steady climb here in the last couple of years. FSBOs hit a record low, so that's for sale by owner. Only 5% of homes were sold for sale by owner. I think this is an interesting stat. If you're considering this, a FSBO median home price is $360 versus $425 for agent-assisted home sales. Obviously, it's hard to know if the lower price point people are tending to go FSBO. It's not maybe a perfect data point, but I think it's also at least illustrative about the value that agents bring to the home sale process. Fewer households with children are buying homes. Just 24% of buyers had children under 18 years of age. That was 58%, 85. Again, you got kids. It's expensive to have kids, so it's going to be harder to buy a home. And this is a difficult kind of lack of affordability in our world. And buying for the long haul, buyers are now planning on staying in their homes much longer, expected to be 15 years now. In 2000 to 2008, it was just 6. So it's gone up, 2.5 times or 1.5 times. So it's pretty big, significant change. And, I think we're feeling it as realtors. A lot of buyers or a lot of people on the selling side are sitting tight with interest rates going up. A lot of people are moving when they have to, when they have big life events. So that's what we're seeing mostly in the real estate world here. And I do have one last thing that I think is worth at least looking back, is just like the history of interest rates, just to get a little bit of perspective to close out here. From here, like I said before, 2022 was when rates really started kind of going up, and you've seen we've been in the 6 to 7% range since. And we had this window from around the housing crash and recession here where interest rates went down, and then they were in the 4 or 5% range, and then we had COVID and rates really tanked. So we tanked there for about 2 years. But before that, if you look across here, we're really kind of where we were in the 2000s, and then before that, we're lower than we were for decades. So I'll just leave you with that. I mean, obviously prices have gone up, and we're dealing with that as a society. But interest rates, they've come back down a little bit, and that's good. About 1% from where they were a little bit over a year ago, and but we're getting better, getting back on track. They're not that high as they have been historically. So it's the holidays. Thought we'd end on a more positive note here. And anyways, if there's anything I can do for you or anyone please don't hesitate to reach out. My contact information is below in the description. And if you have any comments, I'd love to hear them. See what you think about the market. If you have any questions about the market, let me know. Okay, thanks a lot. Happy holidays, and hope to talk to you soon. Bye-bye.